Welcome back. We mentioned we got a rally on our way on this Friday morning. We'll take a look at what's happening with S&P Dow and NASDAQ performance so far today. Better than expected U.S. jobs report. And the S&P now in positive territory for the week. We mentioned that on Monday and Tuesday we saw a sell-off on some of the trade concerns, but now we're ending the week, it looks like, potentially on a positive note. Let's go to Chicago now and check in with Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, happy Friday. Thanks for joining us. So
good morning to you.
Let's talk a little bit more about what's going on in the markets. How would you say this week has unfolded?
Well, nothing new here. So we saw some profit taking the beginning of the month, December. So we had 3 sessions in a row. We had Friday, which is a post-holiday, and then Monday and Tuesday, where we backed off, went below the 3,100, which is important psychologically in the S&P because that was the target from some of the trading range we had before. But then we rallied back above it, and it's back to normal. So what was important for me was to see how the market responded when we had some profit taking, and that's very much a positive. Like you said, we're back to plus on the week. Let's see if we can hold these gains. But what I did notice about the jobs number being strong, there's always a downside, is that the odds of the rate cut in March went from 30% before the number to now at only 15%. So that's something to think about.
And so when you talk about the markets getting back to normal, does that suggest you think the momentum is up heading into the end of the year? Because we had a pretty strong November, and everybody sort of thought, okay, yeah, stocks are probably going to melt up into the end of 2019. And then we saw a bit of a sidetracking in the first few trading days of December.
Right. Well, most important about the back off that we saw on Monday and Tuesday was that it was a very shallow pullback on the same kind of news that usually had a big reaction. So we're getting smaller reactions to the trade issue concerns and the back and forth of when it's going to be done and what's going to be done in phase one. You know, the market's really gotten past that, and we're moving forward. So I view that as very much a positive. Though obviously, momentum in the market's very strong. We're up 30% across the board, and more than importantly than that is, let's remember where we were last December, and we've moved up 35, I think 45% in tech since those December depths. So, well, it may feel like deja vu. It's a completely different market environment right now. And to first illustrate that is, let's look at the VIX. The VIX right now is 50% below where it was. I mean, it's down 50% so far in 2019, and it's 65% below where it was in those December depths. So things are much different. Even though we have kind of the same news, the market reaction is very, very positive.
Let's dig a little deeper into that, and just in terms of the sectors. I mean, I think because for several months there you saw everything finding buyers, the question became, are people going to buy technology stocks and the stuff that they usually buy as a safety play, a lot of companies that are a lot more focused on dividends, or something going to change, especially given some of the valuations getting a bit stretched for some of those companies that, we don't always see have such big stock market moves.
Yeah, and see, I'm looking for a more across-the-board, participation. Now, again, what we need to do or I need to do as a trader is find those stocks and sectors that haven't participated yet. I think energy is a great example there. There are so many energy stocks, and obviously, you're talking to Canadian customers. You're very familiar with that. There's so many energy and resource stocks that haven't played ball yet, and I want to say yet. So I think that's the third leg of the stool for the stock market is the crude market rebound, and it still hasn't had anywhere near the recovery, obviously, that the stock market has, and the global growth concerns and the worry about recession and the around the world consumption issues. I think those can be reflected in a positive crude market, and we've had a pretty straight up move, and technically we're approaching the $60 level, and a breakout above 60 targets 70 because we've been trading sideways now for most of the year between 50 and 60. So I think that could be a barometer of positive market sentiment when we see the energy market break out, and that's going to help so many stocks.
So let's get back to the trade story, where every day we've got ups and downs associated with that, and I guess...
We do?
Shocker, I know. We're now less than 10 days away from this believed trade deadline on new tariffs being imposed on
Right.
China. What are you going to be watching for over the next week and a half on the trade file?
I'm just looking to see how the markets react when we make new highs. It's most likely here not an if, but a when we make new all-time highs. And again, the momentum's a very strong force. I talked about interest rates at the beginning here. Interest rates are ridiculously low. The stock market is where the yield is, where people are going for yield, and I don't see that changing anytime soon. We get hung up on each and every, issue, but I think that's by design. That's what the president wants people to focus on, and he can be the hero because he can make or pretend to break the markets. But obviously it's in his best interest, and he's going to do everything he can to support the stock market. He's going to pull every lever he can to not let the stock market sell off. So if you're thinking that the top is in and you're thinking the market's going to go down, you're fighting the force not of just the Fed, but the federal government. So it's not just the Fed's action. The president has so many different things he can do, and adding money like he's been doing week after week after week to the repo market is another stimulus. And so that's an example of they're going to do everything and anything they can over the next how many months we have until our fun elections to support the stock market.
Yeah, we'll be watching for those. There is a source of frustration for the president, though, and it is your currency, the U.S. dollar, which when he looks at other currencies around the world, he often gets frustrated. And we're sitting here on this Friday watching a stronger dollar. I mean, certainly we saw that dynamic play out in Canada because we had a disappointing jobs report today. You had a better than expected U.S. jobs report. So the greenback gaining some ground today. What are you going to be watching for in the currency markets, given that, you got stocks moving higher, but you also have the U.S. dollar moving higher?
Yeah, I'm glad you brought that up, because that's the last of the levers that he can pull. And so what he did was we had a huge corporate tax cut. Then we've had, obviously, I just talked about the repo markets. He talked the Fed down. The Fed doesn't have any more room, maybe one more cut, but they can't cut rates. And he actually had them come to not to the White House, but the White House residence, had the Fed come to the White House residence, and he talked to them about negative rates. So I don't even know what to say after that. But the next lever and the only other thing he has that he's going to push for is the decline in the dollar. And it's such a unique situation. I mean, all of this is completely unique. But in my lifetime, the government has always talked about the strength of the dollar and how they outwardly say they want a strong dollar. But yes, in the background they're saying that a dollar weakness helps out exports and so forth. But I've never seen, and no one's ever seen, the president outwardly say and demand that he wants the dollar down. So let's see if his bully tactics can knock the dollar down. We've been trading between 97 and 99 here, so a break below that 97 can give it a knockdown. And what we have seen, though, we've seen other currencies bottom out. So you've seen the British pound breakout, the Boris breakout bounce is what I see there, and you're seeing the euro currency right up at the edge of its range. So if those can continue their breakouts, that can help knock the U.S. dollar down, and it can kind of feed on itself a bit and get the results that the president is looking for.
Alan, good to get your take as always. Thanks so much. Hey, those Chicago Bears looked pretty good last night.
That's one game.
Take it like the markets, one day at a time. Alan Nuckman, market strategist at Agora Financial, joining us from Chicago.